It's about that time of day again. It is that time of day again. Wednesday evening, March the 20th, 2019. My name is Joseph, and this, of course, is your nightly newsletter. You know, I help new traders earn consistent, reliable, dependable, usually predictable profits using a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is to identify the best of the best opportunities that I see setting up for tomorrow, Thursday's trading session. And in the wake of this big FOMC blowout this afternoon, we have a ton of opportunities setting up as we go into the end of this week of March. I'm going to cover oil, S&P, Nasdaq, gold, and euro in the video tonight. I'm going to jump in here first, though, for oil here this evening because oil appears to be kind of like a layup right now. We get a very easy chart to analyze right now on oil. Got a nice, strong, big bull run higher. And of course, with these higher highs, as we're going higher, I'm lining up those highs. And boy, does that fit like a glove right at that low. What does that give us here, guys? That gives us a spike and channel. Now, spike and channels are notorious for very easy setups. Anytime I see a spike and channel, I look for a nice deep pullback and a retest of the high. I'm looking for some buying opportunities down inside this battle zone here tomorrow morning. And of course, I've got a target not only at one measured move, a minor measured move, but a couple major levels all lining up overhead at 60-40. So I know I'm looking for that nice deep pullback to be a buyer down inside my battle zone. And I'm going to talk about 3, maybe 4 different entry patterns I'm watching for tomorrow morning. So make sure you stay tuned, and we'll dig into that oil here in just a few moments. Over on the S&P, what goes up? Well, sometimes must come down, right? Not always, but in this case on the S&P, it definitely did. We, of course, have a range-bound market right now on the S&P. That started off early this morning. Markets jumped lower, jumped higher, and then, hey, why not? Let's come right back down again. It's a range-bound market, which means overall my plan is to buy low, sell high, avoid the middle, and focus on failures. But let's be honest, there's one big clue on this, and that is that strong move. Now, that strong move tells me we're going to probably see if we can get a pullback, a second leg through. So even though we do have a range-bound market, and eventually I'm looking to buy this market right now, I think the odds are pretty good we're going to get back down to retest that low around that 28.16, finish what they started. And with that strong move down, I'm definitely looking for a chance to sell up inside my battle zone, top of that hidden channel. And tonight, I want to put together 3, maybe 4 different setups I'm going to watch if we do get that pullback. I'll also talk about what if it keeps going without us, right? Then what do we do about getting back into that range? Because I definitely think there's some short-term opportunity to the downside. I think the real money tomorrow is going right back where we came from here. I'm going to grab that S&P here in a moment here as well. Stay tuned on that. How about some Nasdaq? Now, boy, the Nasdaq doesn't look nearly as bearish and dramatic as the S&P. Nasdaq started off inside of a range-bound market today. Big blast higher on the FOMC announcement at 2 o'clock this afternoon. And you'll notice here right now, unlike the S&P, which went in full nosedive mode, right, the Nasdaq looks relatively timid. Right? We have a strong move down. We pull back to the moving average. And right now, we're waiting for that 1, 2, 3 reversal. So yeah, it does look like these bears want to take it. But how many times, guys, have we seen a strong bull move, a deep pullback, a pullback to the moving average? How many times have I seen that pattern fail and run back up? Yeah, that's what I'm looking for to be a buyer tomorrow. And because we see those big, strong legs usually retest those highs, I got my eyes on the buy side here, but we got to make sure we give those sellers a chance to finish the job. So what I'm waiting for is I've got my eyes on the battle zone here between 74.22 and 74.32. I'm looking for a couple key things here to go through that battle zone and hopefully make a profit on the way back up to retest the high. But what if I'm wrong, right? S&P looks like it's dumping back down to its highs, right? What if I'm wrong? I'm also going to put together a plan tonight. If I'm wrong about the long side, side and we collapse back lower, right, I won't leave you hanging. I'm going to give you a couple different sessions, right, different scenarios there to watch as we do go lower. And then, of course, over on the gold here tonight, the yellow metal, as I talked about last night, I warned you guys it's going to be a bit of a neck breaker today on gold, and you can definitely see that's what happened. We go up, we go down, and we go straight right back up. Anytime I see a strong move in one direction, I always know the odds are pretty good. We get a deep pullback and a retest of that high. Now what we're going to do is find the entry point on it. It looks to me like this market wants to go into a range. If I can get that range, I'll put together a good plan for us. If we get the range tonight, I'm also looking at this more as a flag. I think right now, all you really have on this is a flag. Flag patterns are, in my experience, the most challenging of all the patterns. So I want to make sure I go over all the scenarios on this. I'm going to look for, on the flag, opportunities to get and use that flag to be a buyer. And I also want to talk about what a failed flag might look like if this thing dumps all the way back down to where it came from here. So I've got a flag pattern on the chart on gold. I'm looking to be a buyer on this gold. I got some key levels of support I'm watching here. We'll talk about how I plan on buying this market tomorrow. And of course, if I'm wrong, right, how the plan will change, right, if we do turn back to a bear market. Got a lot to cover there on the gold. And then, of course, over here on the euro, euro is very similar to gold, except there's one big difference, and that is that 15,000 big round number, which if you've been watching my videos over the past few weeks, watching the euro, I know the euro's all the way at the end of the video every evening, right? But we save the best for last. The euro's been going from the 14,000 to 15,000 and back and forth here. So my plan tomorrow is, even though, again, strong move up, we expect to see a retest of that high, I'm anticipating a bit of a range-bound market here for a little bit, and I'm going to try to pick my spots here to buy nice and low down here tomorrow using a very specific type of entry pattern. We're going to grab a look at that. And of course, we'll cover all of these markets, right, in great detail here tonight. We get some euro, gold, Nasdaq, S&P, and crude oil, because of course, the best days to trade the FOMC announcement are the days after the report comes out. We got big reaction opportunities coming up for Thursday and Friday. Before I jump into those charts, though, and put the plan together for the rest of this week, I want to make sure you never miss a video. And to make sure you never miss another great video, sign up for our mailing list, join our mailing list. Never any spam here. You know me. I'm not going to waste your time here by sending you junk in your inbox. All I need is your name, your email address. Hit that subscribe now button, and I'll email you every time I publish something new. That way you never have to worry about missing another great newsletter, another great psychology video, or anything we publish here at School of Trade. And don't forget, when you subscribe to our newsletter mailing list, make sure you check your inbox, because I'm going to send you a welcome email with all kinds of good stuff to get the most out of our time every evening on the newsletter. And then also, one more thing, don't forget, I'm going to be in the trade room tomorrow, 8 o'clock Eastern time. We'll be using our 3-step trading strategy to find nice, predictable, dependable, profitable opportunities with all of our clients. I'd love to see you there with me tomorrow morning, bright and early at 8 o'clock Eastern time. If you can't be there with me, the next best thing is to grab all the charts that you see me using in tonight's video. They're attached below the video tonight, right here on our blog at sidewaysmarkets.com. I'll put all the links in the description of the YouTube video, but scroll down below this video tonight are all the charts that I'll be using in tomorrow's trade room. And that way, if you can't be with me tomorrow in the trade room, at least you've got the next best part, right? It's grabbing all the resources we'll use for tomorrow morning. And don't forget, if you have any questions, any comments, any concerns, any feedback, any constructive criticism, I'm always trying to make this newsletter better for you guys and gals every evening. Drop me a comment in the comments section. I'd love to know what you love, what you hate, and what you want me to do more of or less of, right, on this nightly newsletter. And then don't forget, while you're in the comments section, hit that subscribe now button, hit that bell icon so you always get notified every time I publish something new, and give me a thumbs up if you love this nightly newsletter every evening. And don't forget, if you have any further questions, you're only a phone call away. Call me, right? I'm here at my corporate headquarters here in Los Angeles. My wife Megan and I are always here standing by to answer the call. No automated systems here, no robots, right? No chat bots. We are real people, a small family-run business here in LA, and we look forward to answering that phone, answering all your questions, and helping you get started. I know, I'm old school. I actually use my telephone to still talk to people these days, right? You know the drill. Call that toll-free phone number. I look forward to speaking with you and answering more of your questions. All right, what's tomorrow? Tomorrow is Tuesday. No, it's not Tuesday. It's Thursday, March the 21st, right? We are going into the last few drops of this week of March. What do we have here on the schedule here for tomorrow? Get some news tomorrow morning, as you can see here, 8:30 Eastern Time. Jobless claims and Philly Fed. I don't think that jobless claims report is going to do much for us tomorrow, but that Philly Fed survey definitely is an important news number tomorrow morning. So I'll tell you right now, we definitely look forward to a nice shot in the arm tomorrow morning at 8:30 Eastern Time. So definitely be there with us, 8 o'clock Eastern. We got that big news coming out tomorrow morning at 8:30, so we'll have a front row seat for that with all of our clients executing that three-step strategy together tomorrow in the trade room. And don't forget, if you're in London, if you're in Asia, if you're trading the London session, don't forget this week is filled with Brexit. It's been dominating headlines in the pre-market London session. If you're trading London right now, keep your eyes open because we're seeing a lot of big moves here, right, coming out of those headlines. So don't forget, tomorrow morning, 8 o'clock Eastern Time, I will see you there with me. In the meantime, though, let's jump into these charts here. We've got a lot to cover here tonight. Boy, what didn't happen today on crude oil? We had inventories today. We had FOMC day today, and one hell of a move here, right, to the upside. The first thing I always do is I always ask myself, what type of market conditions are we dealing with? Is this a range-bound scenario? Or is this a trending scenario? Well, I can already tell because of the higher lows, the higher highs, the nice slope to the moving average. I can already tell this is not a range-bound market. This is a trending market. Now, whenever I have a trending market, I know there are three basic components I want to use. One is the direction of the trend. In this case, it's a bullish direction. A bullish direction tells me I want to buy at support. Now, where are the most reliable support levels in a trending market? I like to use channels. More importantly, or more specifically, I like to use hidden channels. Right? What are hidden channels? Well, your regular channels, I'm sure if you were to read the old school trading books, most people would draw their channel like that, right? That's a channel right there. Up, down, up, right? Take that trend line, copy and paste parallel line. That's your channel right there. The problem with your standard types of channels, which are the channels that have been taught in most trading books, right, over the past 50 years, they don't really put you in a very good risk-reward position. Remember, being a successful trader means finding high probability opportunities that give you a low risk, high reward, right? If I buy the low of this channel, my risk to reward isn't that great. If I can get a deeper pullback off this high, I can get a much better risk-reward ratio. So how do we find those better risk-reward ratios? We don't use those kind of old school channels, right? We use a new school type of channel, right? Or what I call a hidden channel. Instead of finding support by looking for support, I find support by actually looking for resistance, believe it or not, right? A little bit different than your typical stuff, right? That's all right. I'm pretty much self-taught, right? Which is why I look at these markets very differently. I take those highs, I bring it down to that low. I would normally, by the way, guys, I would normally put it down here, right, off that low, but this just fits so well. You can see those wicks right there, right, fits really well there. And then as an added bonus, I toss it down at the bottom. So now we've got a couple key levels of support here now. We got the channel low, right, around that 59.60 area. And then we also got that big low, right, all the way down. Now, to be very honest with you, I don't think that big low is going to mean very much to us, at least not for now, just because by the time we get down there, this will probably be a bear market. So I don't think we're going to have to use that big channel low, but I really think this smaller channel is going to be our best friend. So there's two things so far. I talked about three, right? The first thing is go with the market's momentum. Second thing is to use a channel, right? I went into a long-winded speech on why I use this channel. The third piece of a trending day is where's my target? A measured move. I like to use measured moves. One leg up, big strong move, right? Second leg up. There's our measured move up around 60.52. That, in my book, is the big target for those buyers. But you'll notice, though, just below that level, there appears to be a major measured move down there. Let's go back out a little bit here. There we go. There we go. And you can see here where that's coming from now, right? Strong move up into that big major measured move. So we got a bunch of resistance overhead. The trend tells me to buy at support right now. The channel tells me I've got great support down right at these lows. And of course, that measured move tells me where my exits should be, where my targets should be. All right, how do we buy this now? I want to buy at support, right? How do we buy on the pullback right now? I want to buy at support, so I'm waiting for a nice deep pullback. Let's scroll in a little bit tighter here for you, right? And ultimately, there are maybe four different patterns I'm watching for if we get the pullback. First of all, it's a relatively wide range. Oftentimes, when we see wide channels like this, we're going to get what we call a two-legged pullback, which is one leg pullback in two legs. Draw that trend line on top of it, and now I can use that two-legged pullback, or use that trend line, I should say, as a level of support on the opposite side. I call these two-legged pullbacks the abbreviation, right, the 2LP. Right, I'll talk more about that here as we go. So two-legged pullbacks, very, very common in wide range channels like this because there's just so much room, right, to get that pullback. And I talked about this earlier this week, right? I can take a small amount of risk for a nice big amount of reward in those nice deep pullback scenarios. So that's one pattern I'm looking for here tomorrow. What if we don't get that, right? We might just go pulling back all the way back down to that low. If we don't get that two-legged pullback, I'm going to look for that strong pullback now to sucker in some of the sellers. I would expect now those sellers will think this market is bearish. They'll try to sell off that moving average, right? If we see a strong pullback off the high, I guarantee you all the rookies in the market who are trading those little 89 tick charts, right? Those fast time frames, they're going to see this as a bear market. They're going to try to sell off that moving average, and that's exactly where I want to place my entry. At that point now I know that's where stops are sitting here, and I can now buy right into those stop losses. That's called a failure setup. Love these failure patterns. Now, after we get that failure pattern and the market rallies higher, the sellers get stopped out of the market, buyers take back control. I don't want to go chasing after it. So what's the best way to avoid chasing after the market? Buy a pullback. Wait for that pullback. This first pullback after a failure pattern, right, is a remarkably reliable setup, right? That pullback pattern, again, it's a failure off the moving average, a blast up, right? We can buy into those stops, a nice quick scalp on the way higher here, but don't chase after it, right? Look for that deep pullback. Remarkable how reliable that pattern is. And where's our target? You got it. Right up to retest those highs and up into that measured move. So a great sequence, two-legged pullback, failure pattern, or breakout pullback. Now, I want to go over one more scenario here with you. What if we don't pull back at all? Right? What if this thing just pulls up and double tops? What if we don't pull back? Right? What if it goes sideways here right now? What if we come out tomorrow morning and this thing's going sideways? Then what do I do? I'm glad you asked. Take the size of that range, copy and paste it down. That will give you a level of support down here. Okay? Size of the range equal 1-to-1. Size of the range, size of that support. Find that level of support. Now, use a very specific pattern. It's called a 1-2 try failure. It's a breakout failure. Let those bears try once, let them try twice, then we buy going back up into that trading range. Okay, if we go sideways here. Now, what if the market goes higher here, right? What if I'm wrong on this? What if it keeps going higher here? Then what do? We look for traps, right? Trap. Trap patterns are the best setups on our way up to that measured move. Okay, so here's the kicker. You've got to make sure you get that pattern. If this thing keeps going higher here, right, we've got to get that entry before we get to that 52. And the best way to do that at that point is a trap pattern. right? Trap pattern, trap pattern, trap pattern. Trap patterns are the best patterns to avoid buying into resistance. But wait a second, Joe, wait a second. What if it goes all the way up and I don't get a chance to do anything? Then what do? Glad you asked. Most of the time, when we get to a measured move, we almost always see a deep pullback, a failure, and a retest. So if we get to that measured move, no, it's not bearish now, but we almost always see once we get the measured move, we almost always get a double up on that measured move. Wait for that same failure pattern into that pullback pattern, right? Failure, pullback, and back up. The same basic pattern that I talked about earlier. Boy, we've covered a lot so far in this one chart. Two-legged pullback, failure patterns, two try failures, breakout pullbacks, trap patterns. Guys, I have so much I want to share with you, but I can't do it all on this video. So if you want a deeper dive into the entire three-step trading strategy that we use every day in our trade room, along with all my favorite entry patterns, what I'll do is this. I'll put a link in the upper right-hand corner for you. I'll also put a big red button down here in the blog for what we call our free trading course. What I'll do is I'll send you a special link to come in the members section of the website here at School of Trade and participate in our free trading course, because I want to show you all the good stuff that we teach to all of our clients here at School of Trade, and I want to teach you more about what I know about the markets. I just don't have time to do it all on this video. So don't delay. Grab that free course in the upper right-hand corner or grab that big red button below the video tonight on our blog and get registered for that free course. Now, last but not least, to the one thing I haven't talked about, and we saw this earlier, how do we turn bearish, right? How does the market turn bearish? Well, a bull market starts off with a strong move up, a pull back to the moving average, and a strong move off the moving average. I need the same thing here now for the bears. Strong move down, pull back to the moving average, and strong move off the moving average. I call these 1, 2, 3 reversals. If I can get that strong move down, remember, though, these oftentimes fail, and we'll buy that right back up. So promise me you're not going to try chasing this thing, because if all it took was a little pullback to reverse the trend, well, what happened there, right? These happen all the time. So strong move down, back to the moving average, strong move off the moving average. Then, sorry about that. Strong move down, pull back to the moving average, strong move off the moving average. Then mark up your low here. Mark up your channel here, right? Hidden channel, and find your sell right off of that, right off of the high of that channel. Again, if we get that strong move down, that pull back to the moving average, right? Instead of the failure now, it runs off the moving average. Now it's a bear market. Mark up that low. Mark up that low. That creates that hidden channel. Same technique we talked about earlier, except in the opposite direction. And now I know where my sweet spot is, right up in the top of that channel, right? And the underbelly of that range. Where's our target at that point? Yeah, target's pretty easy at that point, all the way down, right, to retest that low at 58, 56 and change. We are locked and loaded here to make the most out of our day tomorrow on the oil market. All we need now is some time. All right, let's grab some S&P here tonight. First thing I always ask is, what type of day are we dealing with right now? Are these trending markets or these range-bound markets? Well, the fact that we sat inside that range for a long time this morning tells me this is a range-bound market. Now, what do we do with a range-bound market? We buy low, we sell high, we avoid the middle. Where are the most reliable support and resistance levels in range-bound markets? I just talked about these on the oil, right? Take the size of that range, copy and paste. Well, look at that right there. He wasn't kidding. Whoa, look at this. On the opposite side, take that range, copy and paste it. Well, I'll be, right? He wasn't joking about that. Those are very, very reliable levels. We call those range expansion levels. So as you can see, S&P's been pushing all the buttons, right? They walked into the elevator and every floor got hit today, right, on this chart. So range-bound markets, buy low, sell high, fade those breakouts, right? And of course, we use those range expansion levels. Now with those range expansion levels, right, let me get rid of these additional words here that we keep this nice and clean here for us right now. so I can draw myself a little story here for you guys, right? So now you know we're a range-bound market. So range-bound markets tell me buy low, sell high. So as we go lower here, right, I'm looking to be a buyer now going back into that range. As we go higher, you got it, right? Looking for that sell, right, back down into that range. Now there's one more problem though. Anytime we see a strong move in one direction, we almost always get a two-legged pullback and another leg, right? We see a strong move in one direction, we almost always are going to see a two-legged pullback and a second leg. So even though the range tells me to buy low, sell high, and we are very low right now, because that momentum is so strong, you are most likely going to see sellers looking at some level of resistance to give us, at the very least, one more leg. It may not be a big leg. It'll probably end up finishing this move down to that 28.16 and change down there. So I think we have a very small and becoming smaller window of opportunity here right now to be a seller right on this S&P. But I need to find some level of resistance. Now, again, I realize in the old school trading books, they would tell you to draw that trend line down, right? Put a channel right there, and there's your channel, right? Well, that's all fine and dandy, but it really doesn't give me any information about where I could sell high here because, selling high is where you get those nice low risk, high reward opportunities, right? So it'd be nice if I had a channel that I could use to find some resistance here, right? To be able to sell at resistance. So where would be some levels of resistance we could use? Well, how about a channel and a hidden channel, right? Let's draw off those lows. Let's bring it up to those highs. And now we're talking. Now I've got something that I can sink my teeth into up overhead. At the same time here, I can also see a strong move down, a pullback, and a go. That pullback, by the way, did not go back to the moving average. If you look really closely at it there, yeah, see, moving averages can be very misleading sometimes. They look like they get a test. That definitely had a test right there. Going through moving average is always a good clue there. That one back here, though, I don't think they got that pullback to the moving average. That's even more reason why I think people are waiting for this pullback here to sell the heck out of it once it does. But bottom line, though, is down, up, down, right? What do we call those levels? Those are called reversal lines. Reversal lines are really, really valuable levels of support and resistance. In this case, I can use that reversal line now, right, also as a level of resistance. So boy, when you put that reversal line on with the underbelly of this range, combine that with that top of that hidden channel, and bingo, right? We got a great little powder keg of resistance up there to now look for a chance to be a seller. So I want to be a seller, but I got to do it now, right? I got to do it fast because by the time we get down to these lows here, this is where the objective is, right? That's the target for those sellers. So I really want to find my way in on this before we get there. Once we get there, then it's pretty much mission accomplished. Let's go back now into that trading range. So there are ultimately two, maybe three scenarios to keep in mind here. One is going to be the up and down. The two will be the down and up, right? And of course, the third one, right, is what if it just blows everything out of the water and goes right back up again, right? Let's get ready for that as well. So as we look at this now, my real goal on this is to get something up above that moving average. That's what I really want to sink my teeth into right now because you'll notice we have not been able to do much damage above that moving average at all right now. And we may not, but this is the ideal scenario. The ideal scenario is let's get a pullback above that moving average. That pullback above the moving average now will give me the ability now to trap those buyers, right? Buyers will think we're going back into the range. They'll try to buy that pullback. And of course, I'm going to look to sell right into their failure. Now, once we get that failure pattern to trigger, then I'll look for that pullback. And if we can get it, hopefully we get it. We might have a difficult time getting that pullback because it might just dump, right, as those buyers realize they're wrong. But there are two setups that I am hopefully going to be able to sink my teeth into tomorrow morning, right, as this thing tumbles back down again, right, to that move as we go lower. Another thing you want to consider here is if this market ends up going sideways down here, right? You may get a little bit of hesitancy down here because traders may not want to sell very low. If that's the case, what do we do with the range? We go with the directional bias. I want to sell. We take the size of the range. You got it. You got it. Copy it up. Create the level of resistance. And then which pattern? The 1, the 2, the failure pattern. Let those buyers try once. Let those buyers try twice. And we'll sell it right into those stops, right, once that breakout failure is triggered. Now, another possibility here, we'll see if we get it, is going to be if we end up running lower here before we get that big target down here, right, another option is going to be a trap into a trap channel combination. That will also be an option, but be aware it's going to be a lot more difficult to get that trap if we go lower from here. I really want to see it either go sideways, give us a shot to sell above the range, or give us a pullback here, a buyer failure, and go from there. There are 3 scenarios I'm watching right now to sell this market, right, as it goes lower. Now, how do we buy this thing? Right? Let's say we do get the pullback and we drop, or maybe we just run lower here, right? How do we buy this thing now? Well, remember, anytime we see a real strong momentum, if you watched last night's newsletter, what is my number one trading rule? Momentum, right? Follow the momentum of the market right now. Okay, that's why I'm even talking about being a seller right now, because that momentum is so strong. Now, with that said, right, if we have a market now that runs and runs and runs, goes lower here, how do I even think about being a buyer on this? It's against the market's momentum. Well, let me ask you, how many times would you try to sell this market before you gave up on it? When it comes to most people will try things twice. So what I always use is, I always kind of use that rule of 2. I let the sellers try once to sell it. I wait for them to try a second time to sell it. And then I look to buy into their stops, right? I let the bears try once. And just between you, me, and the rest of the YouTube land, I like to look for that first try at a place where I would be looking to sell. I'm not trying to sell this down here because we're below that range, but I'm thinking, okay, if I was a seller and I didn't really know what I was doing, I just knew the market was down, where would I try to sell the first time? Probably a trap, probably around the top of that channel. All right, guys? So the moral of the story is don't think that you can do it here. Right? That's not going to be enough, right? 1, 2 right there. It's not going to be enough. Maybe it is, but most of the time though, you want to think, okay, where if I was a seller, kind of put yourself in the shoes of those sellers and think, okay, if I was a seller right now, right? If I didn't know this was a range, where would I be trying to sell it? I'll be trying to sell it there, right? Above that high, little trap high there. That's 1. Then go up 2. And who knows, at that point now, we get a trend line coming up, right? And we can buy off of that rising support trend line. Let those bears try once. Let those bears try twice. Again, because that momentum is so strong, I would anticipate now that sellers are not going to give up very easily. They're going to try once. They're going to try twice, and then whoop, right? They'll panic, get out of their positions, and the market will rally higher. That's the buy I'm looking for as we go higher. All right, guys? Now, what if the market turns, right? What if it turns? What if we go, well, wait a second, that was a big move up. We're going back to those highs, right? What do we look for here? There's really 2 scenarios we want to look for. If we see the market turn and run here right now, we know where it's trying to go. It's trying to go back to retest that high. I'm ultimately looking for traps in the short term. Right? Trap patterns. And those trap patterns will almost always line up with some form of hidden channel, right? Look for that hidden channel and then look for that trap entry, right, as we go. Remember, this particular situation requires a strong blitz higher. It's going to feel like if you don't act fast, you're going to miss this entire move. That's what the feeling of the market will feel like. Find that hidden channel, look for a trap, and buy the low of that market. Right? Now, if you can't get in on this, right? If you can't get in quickly, if it rallies higher here, right, and you can't get in quickly, you got to remember that's your resistance. At that point now, it's pull back, right? It's failure, and it's back up from there. So if I can get in early on the move going higher here, I can go trap, and be aggressive with it. But if it just runs and I can't get in, then I've got to be more disciplined, wait for that pullback. And the pullback, in this case, because we're so close to that objective at that point, right, you're waiting for that 1, that 2, you're buying into those seller failures. All right, guys? Got a lot of great opportunities here right now on the S&P. And again, coming out of the FOMC announcement tomorrow, right, really anything is possible. I'm looking for some short-term sells, but some long-term buys here, right, on that Emini tomorrow. How about some Nasdaq here tonight? So Nasdaq is, when you look at the S&P looks nothing but bearish right now. The Nasdaq is similar to the S&P, right? It started off inside of a range this morning, chopped around inside that range for a while, right? Powell and the co, right, came out and ran this sucker higher. Now, what's the rule, guys? Anytime we see a strong move in one direction, what do we know? We expect to see a second leg, right? That's the rule. So we're looking for that run to go higher here. If the buyers can't hold that, where are we going to go? We're going to probably go back inside that range where we came from. Now, you can see in this example, though, today, right, sometimes those big news events come out and you're not going to be able, right, you're not going to be able to hold in that range by using the same tricks that I talked to earlier. Take the trading range, right? Find support, find resistance, right? This is a news breakout, right? News comes out, blows everything out of the water, and pretty much is responsible for breaking free of that trading range. So the range at this point really isn't that big of a deal. It's there, but it's not a huge part, right, of this analysis. What is most important is that big blammo, that big blast higher. Let's talk about this big blast higher, because there's a bunch of stuff I like about this big blast higher here. First of all, let's dig into this a little bit closer here. First things first, spike in channel. Strong move up into a spike in channel. Now, what do spike in channels tell us? They tell us deep, deep pullback. Now, where is a really common place for a spike in channel pullback? To the base of the channel. That's the first big clue I see right now in that Nasdaq, right? When I see a market jump up and then goes into a trading range, most of the time you're going to get that pullback right into that, what I call the base of the channel. It's where the channel line runs into that spike and the first pullback, right? This area right there. What happens is market pulls back and goes back to retest the high. Because again, anytime you see a strong move in one direction, what happens? Pull back, right, and retest those highs. Okay, so that spike in channel now, you can see it a mile away. Strong spike up into that channel, right? There's your spike in channel. Where's the base of that channel? You're looking at it right there. So we are right inside the base of that channel right now. That's a big clue. That's a very big clue. Okay, that tells me we are easily now on the right track for a run back up to retest the high. But wait, there's more. There's more here. This was something I always play around with, but I was surprised at how well this thing fit, right? Talk about channels here. I can draw off these highs, and at first I'm thinking, there's no way this will make any sense here. I toss it on the low, as you can see. We're not quite there yet, but look at that midline. Right? Usually the midline is what gives away these hidden channels. And look at that midline. Acting all, right? Supply or support and resistance there on us here, right? Inside that middle. Now, I would say, I don't want to, I wouldn't bet the farm on this channel right now, but I'll tell you, that channel is pretty convincing here, the fact that we finished the day sitting right at the low of that channel. So now we've got two channels, right? That spike in channel, deep pullback inside the battle zone. And again, I know, try not to laugh too much about this one. This one's a little bit ridiculous, but boy, does it fit well. Again, I kind of laughed at first, but I mean, it doesn't lie. Look at the midline. It fits great. So the bottom line is, I think we got a couple levels here of support that we're loving on here right now. Combine that now. Strong move up into the buy zone. Strong move up into a support level. I'm looking to buy this thing right now. There's one problem. I've got a trend line coming down. Now, we talked about this before, right? What do we call these? We call these two-legged pullback patterns, right? What's the best way to trade them? You got it. Up and over, right? Up and over. Absolutely. Now, here's the big problem, though, with that setup. I expect I'm going to see, because we've got a strong move off the high, and we're seeing some pretty good strength off of that moving average, has not collapsed yet, so we're not seeing a 1, 2, 3 reversal. Right? This is not a reversal yet. If it does go lower, then it will be a reversal, and we'll talk about that in a moment. Don't you worry. But as of right now, though, this is just a deep pullback. It's a two-legged pullback. Okay? What I'm expecting, though, is to see a bunch of sellers, right, up inside this area here. Let's put it this way. if I thought this market was bearish right now, and I'm not saying it can't be tomorrow, I'm just saying right now, from my point of view, this thing looks like it's ready to go back and retest those highs. We're not quite bearish yet. It's a deep pullback, but I don't see the technical reasons yet for the sellers to really be able to take control of this market. Again, could easily collapse, and we'll talk about that in a moment here as well. But I'm expecting to see some sellers here. If I was a seller, I'd be looking back here at those highs, and I'd be thinking, give me a shot here to sell into it. So that's important, because one of the keys to success in anything we do in trading is being able to use empathy, right? What I call vitamin E, right? The most important vitamin for traders is vitamin E for empathy. Strong move down, pull back. I want to go up into that battle zone, see it come down, and then buy off that trend line from there. That's ultimately what I'm looking for. Now, you might be thinking right now, well, wait a second, Joe, what if we don't get that move up? So again, here's a scenario. I want to go into the battle zone, right? Into the battle zone over, and then buying that two-legged pullback back up. Because then, the reason why I like that so much is because then you've got those sellers roped in. Now those sellers become gasoline, right, on the fire now. It's like pouring fuel on the fire as it rolls back higher. Sellers are stopped out. They got to buy their way out of that move. Now, what if we don't get that deep of a pullback? Then what? Sometimes we get these grinders where we go up and we kind of grind lower here. These grinders can be really tricky to pick a bottom on those. You know, how do you know where to buy off it? You really don't. So I want to get the deep pullback. I want to get the big pullback over and go. But at the same time, though, if it kind of grinds here, now I need to wait for a very specific nested failure pattern. Up, 1, 2, and go. Right? I'm still very much okay with this setup. I like this pattern. It's just I've got to be a little bit more selective there at that point. Once I've got those sellers trying once, trying twice, then we're buying right into that. Again, waiting for the sellers to enter the market where I think they will, and then buying right into their stops after they position themselves in the market. Okay? So now we know how to buy, right? Now we know how to buy that pullback. Relatively easy idea if it keeps going lower. What if the market, though, goes higher here? What if this is just a strong 1-2 failure? Then what do we do? Well, I'll tell you right now, right, if we don't get a pullback, I'm completely fine now going up 1, 2, and looking for that beautiful crown reversal, that trap low, that 2-try trap, right? I'm looking for the 1, the 2, and again, look for a trap on this one. Because we don't get that deep pullback, look to get as low as possible with that trap entry here. So again, couple scenarios, right? Up and over and in, grinding down, 1, 2, and in, or up, 1, 2, trap, and go. Those are 3 easy scenarios we look for here now because of the situation. But wait a second, man. What if this thing drops, right? What if it just collapses here? First of all, where are they trying to go? They're trying to go back into this range. So whatever we do, we've got to avoid selling low. Now, you guys tell me, you watch the newsletter every evening. If this market dumps back down again, what's the best pattern to avoid selling low? Trap patterns, right? Bull traps. Look for that trap high, right? And we're back down from there. And again, I like to combine my traps with those hidden channels, right? Find that hidden channel and combine it with that trap entry. Trap entry patterns aren't required on everything, but when I have a concern about where my target is, then they do become a very important piece of this puzzle. And don't forget, guys, you'll learn all about traps and failures and everything in between inside that free trading course I mentioned earlier. Grab it in the upper right-hand corner or hit that big red button below the video tonight on our blog. Let's keep going. How about some gold now? Because gold, of course, right? Gold was the one that we knew was probably going to be the big mover, right, of the day today, and it did not disappoint. I always start off by asking, what type of market are we dealing with right now? Is it range? Is it trend? This one's a trend for now, right? We don't know enough about it yet. It might turn sideways into a range. I've got that range up here. And if it does turn into a range, you already know the plan, right? If this is a range-bound market tomorrow, what's the plan? It's a bull move into the trading range. What does the range tell me? Buy low, sell high, avoid the middle. If it's a bull market before a range, what do? We buy below the low, right? We buy below that low. If we do turn sideways here and go into a range tomorrow, get rid of that, get rid of that. You know where those are now, right? Two patterns here. If we do go sideways here, if we do end up seeing this as a range, two patterns to watch for. The first one is the two-try failure, 1 and 2. Remember, take that trading range, copy and paste it down. That will give you that key level of support down there, right? Look at how well that will line up, though, too, with that reversal line, right? Great spot there for it. Bottom line, though, is wait for those sellers to try once. Wait for them to try twice. Heck, why not? Even combine in that hidden channel here off those highs down to those lows, right? Great spot to be buying off support here, right? And we're buying back up in, right? Easy pattern if we go sideways with a range. And then is there any breakout patterns here, right? What if we go higher here? If we go higher, 1, 2, and go, right? Let's do it this way here. If I get my range here on the gold, going sideways here, I want to get the 1, right? The 2, let those bears try once, let them try twice. We know where stops are. We're buying into those stops. Big, strong move going higher. Strong move going higher. I see sellers try once. I see sellers try twice. Higher highs, right? Sellers try twice. Once they try twice, again, higher highs there. We look then, right, to buy right into those stops, right? Stops sitting right there, right? We're buying now, right, into those stop losses. Which one's more reliable? Oh, the one below it, obviously, right? The one below the range is obviously more reliable because you're buying low, right? The one above the range, where's your target? Measured move, right? Measure that one, measured move, okay? That's your big target. Again, got to be real strong up here, real strong breakout higher, then let them try once, let them try twice, buy into those stops, okay? That's if we turn range bound here tomorrow. What it looks like right now, though, is a flag. It's a strong move up, pull back, lower high, and go. Draw that trend line down. That creates the flag channel. Flag patterns are notorious for 1, 2, 3 legs lower. So don't be surprised if we see this thing slowly. The key word for a flag pattern is slow. It always feels very slow, very slow. Once I see that deep pullback on that flag, now I'm looking for the up, the over, and the go. What is always a very important part of a flag pattern is anticipating where the counter trend sellers are likely going to be waiting. If I was a seller, I'd be waiting to sell up above those highs. So look to get above that high, rope in those sellers, and buying right into those stop losses. That makes sense. Same idea we just talked about on the Nasdaq. Anticipate where those sellers are likely going to be sitting up there. Wait for them to commit, and then buy right into that failure. Now, what does a failed flag look like? Because flag patterns, they fail all the time. You're going to know it's a failure because that will run, right? That move off that high will run. If it runs, what's the plan from there? If it runs, we then find that low, find that new channel. That marks our sweet spot, right? And we're selling off the top of that channel, right? We're not chasing it as it goes lower. So lots of flag patterns fail. And if they do fail, we don't chase after the failure because eventually the profit taking will stop and we'll sell right up into those highs. All right, guys? So, boy, we got a pretty good plan here on the gold. If it goes higher, if it goes sideways, if it pulls back, and even if it reverses here on that yellow metal. We're looking great, guys. How about some euro here tonight? Let's wrap up tonight on that euro. First thing we always ask is, what type of day is it? Is it a range or a trend? Well, I think this is a trend. There's a little tiny range up there. But I'm going to say for now, though, it's a trending environment. Anytime I see a trending market, I always know I want to go with the direction of the market's momentum, right? What are we right now? We're bullish. right? We're bullish right now. I want to be a buyer, at least until the momentum turns bearish. We also know, look for channels, right? I draw off that channel, or off those highs. I bring it down to that low, and you can see how well those hidden channels fit. Okay, what else we look for? A measured move. Measured move on this chart, very dramatic. Strong move up, measured move, right? Measured move target. It's a ways away, right? It's up around those 16,000 probably if you were to measure this off this pullback, right? That measured move. Yeah, it is. It's pretty much right up around 16,000. So if we do end up getting this break higher here, you know where the next big objective is going to be. But there's one big variable on this chart that concerns me, and that is the big round number, right? The big round number is notorious on the euro lately. The euro has been very good about this, where it's gone sideways, blasted up to a big round number, sits sideways for a bit, blasts up to another one, sits sideways for a while, comes back, right? So I'm anticipating, unless we see some more fireworks out of Brexit tomorrow morning, I'm anticipating here on euro that we're going to probably see a little bit of shenanigans around this big round number. So what I'm going to do is I'm going to put together a plan here for, maybe I'm wrong. Maybe we're hunting for 16,000. Maybe we're going to go back up and push the new highs here. I'm going to put a plan together here on what I'm looking for both scenarios, whether it's bullish going forward or sideways going forward. Now, you already know where that big round number is, right? That's relatively easy there. Now, let's talk about the first scenario. Let's say we settle in here right now. Let's say we settle in and we end up going sideways here around that big round number. Okay, at that point now, nice strong bull momentum. What do? We find those levels of support below, find those levels of resistance above. I wait to go down, 1, 2, and back up again. Same basic pattern, right? 2 try failure pattern, and then back up into that range. From there, how can I buy going higher? Strong move up, bears try once, bears try twice, blasting off once, twice, buying into failures from there. Okay, now remember, buying high, you've got to see tremendous strength going up, right? Which reminds me, what if we don't go sideways, right? What if we blast higher here? If we blast higher, I've got to be careful buying back at that high again, because a lot of times what happens is it'll blast higher, it'll stall out and become a range. If we see a double top at these highs, that becomes a range, and we know the range. What do? We 1, 2, buy back up. Let those bears try once, let them try twice, and we're buying up from there. But if they do go higher, right? If they do blast off going higher, right? If we do blast, oops, sorry about that. Get a little bit sloppy here as we get later in the video, right? Blast off higher, 1, 2, trap, go. 1, 2, trap, go. Let those bears try to sell the high once. Let them try twice. Personally, going through the high after such a big move, I'm going to want to see a trap down here. I'm going to want to see a trap. If I don't get that trap, it'll probably end up being a spike and channel. And in that case, I'll wait to buy the pullback off the low of that channel later on. All right, guys? So a couple different scenarios to keep in mind here. One is, do we get stuck around the big round number, 1, 2, up we go from there? Or do we run up and bounce off that high? It's a trading range. 1, 2, buy back up. Or maybe we break through the high, big blast up, right? 1, 2, trap and go. Or 1, 2, 3, breakout, new hidden channel, buying the pullback off the low of the channel. Target is up at that measured move. How do we turn bearish? 1, 2, 3, reversal. Got to come off that moving average. Strong move down, pull back to the moving average. Strong move off the moving average. Remember, these fail all the time, and we go right back up at the failure pattern. If I get that reversal, mark up that low, mark up the new channel, find that hidden channel, sell off that high, right? And back down where? Into the range we came from. Boy, we got all the bases covered. Now all we need is Father Time to give us a couple more candlesticks so we can start seeing what we get tomorrow. Boy, speaking of tomorrow though, remember, We'll be back in our trade room tomorrow morning, bright and early, 8 o'clock Eastern time. We've gone over the entire plan tonight from oil, E-minis, Nasdaq, gold, and euro. And tomorrow, we're going to put that together right with all of our clients here at School of Trade. And I hope to see you there with me at 8 o'clock Eastern time. Don't forget, as an advanced member here at School of Trade, you get all access to our trade room, our ongoing support sessions, our entire professional video course, and everything you need to do all your job, all the tools, all the indicators, all the cheat sheets and checklists. Guys, you can learn more about that right here on the website. You can learn more about our beginner, intermediate, and advanced classes. We've got great flexible payment options for all membership levels right now. And don't forget, right, a great free trial too. I'm a bit partial to this, of course, but I think we have the best free trial in the business because not only as part of our free trial to get a free pass to come join me as a guest in the trade room, but you also get that free trading course to learn all about what I call the 3-step trading strategy. So don't delay, grab the free trial or become a member, and I'll see you tomorrow morning at 8 o'clock Eastern time, right in time for that first batch of news. Hit the tape tomorrow morning. Guys and gals, if I don't see you tomorrow morning at 8 o'clock Eastern time, I hope I see you tomorrow night. We'll wrap up the week with a Thursday edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.